The U.S. Federal Reserve has raised interest rates by 0.25%, the third rate rise in 2017. The U.S. Central Bank said the move, which was widely expected, underscores solid gains in the U.S. economy. Officials also boosted their economic forecasts, projecting 2.5% growth in GDP in 2017 and 2018, due in part to planned tax cuts. The Fed said it anticipates 3 further increases in rates next year, unchanged from its previous forecast. The decision to raise interest rates takes the Fed farther away from the ultra-low rates it put in place during the financial crisis to boost economic activity. The Fed is targeting a range of 1.25% to 1.5% for its benchmark rate. But a majority of officials said they expect interest rates above 2% will be appropriate next year. The shift in policy comes as the U.S. economy gains strength. U.S. economic output has increased at an annual rate of more than 3% in recent quarters, while the unemployment rate fell to 4.1% last month, the lowest rate since 2001. Federal Reserve Chair Janet Yellen, who is stepping down from her post in February, said the economy, labor market, and financial system have grown stronger under her watch. "There's less to lose sleep about now than has been true for quite some time, so I feel good about the economic outlook," she said. Ms. Yellen said policymakers expect the economy to get a further lift from the package of tax cuts being prepared for final approval in Congress, and those expectations were factored in when they revised upwards their predictions for economic growth. The Fed is now forecasting 2.5% GDP growth in 2018, compared to a forecast it made in September of 2.1%. Despite the acceleration, members of the Federal Open Markets Committee said they expect interest rate increases to remain gradual, a sign of ongoing concerns that inflation has remained below the Fed's 2% target. Ms. Yellen said she continues to believe the lackluster inflation growth is due to one-off factors, such as declines in costs for mobile phone plans. But she conceded, "There's work undone there."